Okay, so we're diving into the financial world today, and it looks like IndusInd Bank just dropped their Q3 results, right?
Yeah, that's right. And it's a bit of a mixed bag, actually. They had a pretty significant drop in profit year on year, but still managed to beat the street's expectations, which is interesting.
A 39% drop in profit? That sounds pretty drastic. What exactly happened there?
Well, their standalone net profit fell to 1,401 crore rupees, down from 2,298 crore rupees last year. So, yeah, a pretty big drop. But the analysts were actually expecting an even worse number, around 1,282 crore rupees. So, I guess they sort of, beat expectations in that sense.
Okay, so they did better than expected, but still not great overall. Now, where exactly is the bank seeing a decline?
Well, a key area was their net interest income, or NII, which is like the difference between the interest they earn on loans and what they pay on deposits. This fell slightly to 5,228 crore rupees from 5,296 crore rupees last year. Also, their net interest margins, or NIMS, decreased quite a bit. It's like they're making less money from lending now.
So they are earning less from lending money. That's, not great news. What was the NIM drop exactly?
So the net interest margin dropped to 3.93% in Q3 FY25 from 4.29% in Q3 FY24 and 4.08% in the previous quarter, Q2 FY25. That's quite a significant drop over both year-on-year and quarter-on-quarter comparisons, right?
Right, it is. So it's like a restaurant making less profit on each dish. It may still be selling well, but not as profitably. How did their overall interest earnings do?
Interestingly, their overall interest earnings actually rose by 11% year on year to 12,801 crore rupees. So they are making more interest, but the margins are squeezed, which indicates, they are lending more, but not as profitably as they used to be.
That's a strange situation. Increased earnings, but decreased profits. Like, running on a treadmill, but like not going anywhere. What about the assets? Were those affected by the drop in profit?
The yield on assets actually dropped a bit, going down to 9.63% from 9.75% last year. But, the cost of funds increased to 5.70% from 5.46%. It's like the bank's paying more to borrow money while not getting as much on lending.
That sounds like a squeeze from both sides, right? Paying more and earning less. It's like having to pay more for your coffee beans, but not being able to increase the price of your coffee. It seems like a tough situation to be in.
It is. And that's a key reason behind the profit decline. Now, their operating expenses also increased by about 9%, which adds to the pressure.
Okay, so rising costs and falling margins, that's definitely not a good mix. Did they at least manage to grow their deposits?
Yes, their deposits did grow by 11% year on year to 4,09,438 crore rupees, which is great. Savings deposits also grew by 6% year on year. So they are attracting more money from people, which is, essential for any bank.
So at least some positive movement in attracting deposits. That's one bright spot. Now, what about their non-performing assets, the NPAs? Any changes there?
Yeah, the gross NPA ratio increased to 2.25% from 1.92% last year. And the net NPA ratio rose to 0.68% from 0.57%. That means they have more loans that aren't being paid back, which obviously increases risks.
So that is a negative as well. More bad loans, higher expenses, and lower margins. This quarter sounds rough for IndusInd Bank. What about the other income they had?
Actually, their other income was fairly stable at around 2,355 crore rupees compared to 2,396 crore rupees last year. Core fee income also saw a small dip to 2,123 crores from 2,165 crores. So most of their other income streams remain relatively consistent, which is good.
So at least that income stream, they managed to keep it afloat. One of the key things people look at with banks is like, what is their net worth, right? What did that look like?
Right. So their net worth on a consolidated basis was 65,102 crore rupees in Q3 FY25 compared to 58,841 crore rupees in Q3 FY24. So they actually managed a year-on-year growth here, which is a good sign.
Well, that is definitely a good sign. So the bank is more valuable than last year overall. Now, what about their capital to risk weighted assets ratio, CRA?
The CRA stood at 16.46% as of December 31st, 2024. It's a key indicator of a bank's financial strength. And a CRA of 16.46% shows they have a pretty strong capital base.
Okay, so a strong capital base, but facing some challenges with profits makes you think about the bigger picture, right?
Exactly. It's like having a really strong foundation for a house, but, needing to fix a few leaky pipes and cracked walls. The bank is fundamentally solid, but facing operational challenges.
Right. And this is exactly why we advise investors to check with certified experts before taking any investment decisions. So, in summary, they have like some positives and some pretty big negatives.
Yeah, precisely. Their interest earnings increased, and they have a strong capital base and deposit growth, but also have declining net profits, squeezed margins, and increased bad loans. It's a complex picture.
Absolutely. So, looking forward, what do you think this means for IndusInd Bank? Any insights on what might change?
Well, the bank will need to focus on improving its lending margins and managing bad loans more efficiently. They'll also need to keep an eye on their costs. If they can achieve that, I think they should be able to overcome the current challenges.
So it's a call for efficiency, in all aspects of their operations. It's like telling a soccer team you have the best players but need to play better together.
Exactly. And of course, investors will be closely watching their performance in the coming quarters to see if these trends improve. These are times when smart management can really make the difference.
Right. So keep an eye on those margins and the NPA ratios. It's going to be interesting to see how they perform in the next quarter. But any final takeaways from this quarter's results?
Well, I'd say it highlights how volatile the banking sector can be and how important it is for banks to carefully manage their interest margins and asset quality. It's like sailing through a storm. It requires careful navigation to avoid turbulence.
Right. Makes sense. So it's a bit of a bumpy ride for IndusInd Bank, and they need to take corrective actions and see what the future brings for them.
Indeed, and that's why it's crucial for investors to stay informed and make well-considered decisions. Remember to like, share, and subscribe to our channel for more insightful conversations like this.
Absolutely. Thanks for the breakdown. So, any predictions on how this will affect the stock price in the near future? Well, besides general speculation.
Well, the market will react to the news of the profit drop and increase bad loans. But the fact that the results exceeded market expectations might provide some cushion. It's like a roller coaster. Expect some ups and downs in the short term, but the long-term picture depends on the bank's actions.
True. So the real test will be their ability to rebound. Well, that's a wrap for today. This conversation was a great deep dive into, IndusInd Bank's results.
Yeah, and it shows the importance of looking at all aspects of a financial report, not just the headline numbers. So until next time, stay informed and stay savvy.
Definitely. And don't forget to subscribe. Catch you next time.
Absolutely. Goodbye.